Hey guys, this is Rudy for Bester Investor. It's Friday. Happy Friday. It is October the 9th, 2020. Many of you have asked me to do some intrinsic valuation modeling and to show you guys how you can do some of these calculations. Some of them are very complex and require a lot of assumptions, like the discounted cash flow model, which I will show you. And maybe what I will do with that one is after Occidental has reported in early November, maybe I could do a discounted cash flow model on Occidental to calculate the proposed or assumed intrinsic worth of the company. There are a variety of different ways to do this. The other thing I want to do as well is one of the subscribers, Braun, asked if I could do a comparative analysis between Occidental and ConocoPhillips. I'd be happy to do that too. I'd like to delay that as well until they report at the end of the quarter. They report just within a few days of one another, so allow me a few days and I'll do that modeling for you as well. What I actually want to show you today is a really simple intrinsic valuation calculation modeling using a system called Gordon Growth, which is really applicable only to dividend aristocrats. So that's why I use 3M as my example. So let's quickly take a look at the company snapshot for 3M. And in particular, what I want to look at here is not so much the entire snapshot, except for the fact that it's currently trading at around $170 per share. But I want to focus specifically on the annual dividend yield. Currently, 3M is yielding 3.5%, and it is paying an annual dividend of $5.88 per share. Looking at a quick analysis of the dividend, and I'm just going to read the small text up here very quickly. 3M currently pays an annual dividend of $5.88, which at its current stock price yields 3.5%. That's above the industrial conglomerates industry average of 3.4% and the average stocks in the S&P 500 index, which yields on average 2%. We look at the annual dividend yield by 3M, so it's 3.5%. The other thing we want to look at over here is the dividend growth rate over 3 years, which is nicely tucked away there next to my thumbnail picture, 9%. So just sort of keep those in mind as we go through the calculation. So I'm using a very simple methodology to calculate the intrinsic value called Gordon Growth. So just by way of an example, let's imagine a company whose stock is trading at $110 per share. The company requires a minimum 8% rate of return to pay the dividend of $3 per share for the next year, which is expected to increase by 5% annually. So then it provides you, the Gordon Growth model provides you with a calculation, which is down here. And if you use the calculation based on the input numbers just above it, you can see that this $110 per share company that we referred to up at the top here is currently overvalued to the tune of $10. So let's use the same model for 3M. The rate of return for stocks and bonds, just very briefly as an example, it varies based on the actual financial asset that you're using it for. And calculating the rate of return for stocks and bonds, using this example, assume an investor buys a stock for $60 a share, owns the stock for 5 years, and earns a total amount of $10 in dividends. If the investor were to sell the stock for $80, the share gain per share is $80 less $60, which is $20. In addition, he has earned $10 in dividend income for a total gain of $20 plus $10, which is $30. The rate of return for the stock is thus $30 gain per share divided by the $60 cost per share, or 50%. According to Yachtman, down here at the bottom of the page, 3M's rate of return for the past 10 years is an average of 6.45%. So I'm going to use that as an example for my Gordon Growth model. So if we go back to the calculation, I've included it up here at the top just so that you can be reminded as to what it looks like. In terms of the example I just shared with you a minute ago, now we look at 3M. We know its current stock price is about $170, and we know the current dividend is $5.88. I looked it up. I'm using the Ackman rate of return, which is 6.45, and remember it's a percentage. And during the past 12 months, 3M's average dividend per share growth rate was 3.9, and I just showed you a minute ago on the valuation slide, it was 9 years average over the past 3 years. What I'm going to do though is I'm just going to use the past 12 months because I want to get a Gordon growth share calculation as close as possible to today's price, just using the trailing 12 months as an example. So here's my current dividend, $5.88. Here's my rate of return expressed as a percentage, 0.0645 less, and I'm using, remember, the 3.9% expressed once again as a percentage, so 0.039. So I'm going to deduct 0.039 from 0.0645 and divide that into $5.88, which gives me a total value of $230.58 per share. 3M is currently trading at $170 per share, and using the Gordon growth model for this dividend aristocrat, 3M should be trading at $230. So very, very simplistically, when I make a comment in one of my videos saying 3M is undervalued, this would be an example of how I arrived at that hypothesis. So on that note, guys, this is Rudy for Better Investor signing off, saying thanks for watching. Please remember to subscribe if you like my videos, and I will be back again soon with a new one. Take care, everybody. See you soon.